Here are some common types of loans. Number 1, personal loans. Personal loans are unsecured loans that are not backed by any collateral. They are typically used for a variety of purposes such as medical expenses, home renovations, etc. Number 2, mortgages. As explained earlier, these are specific kind of loans for buying property. Auto loans. These loans are used to purchase a car, a truck, or any kind of a vehicle. They can be secured or unsecured depending on the lender and borrower's creditworthiness. Number 4, student loans. Student loans are used to pay for education expenses such as tuition fees, books, and other living expenses. They can be government backed or be provided by private lenders, and they typically have longer repayment terms than other types of loans. Number 5 are business loans. Business loans are used to finance the operations of a business. They can be used to purchase equipment, hire employees, or expand the business. They can also be secured or unsecured and can be provided by banks or credit unions or other lenders. These are just few of the most common types of loans. There are also other types which include payday loans, bridge loans, and lines of credit, but we don't need to get into it right now. Remember, it is important to carefully consider the terms and conditions of any loan before applying and to only borrow what you can afford to repay. While debt can be a useful tool for financing purchases or investments, it is crucial to be aware of its potential risks and downsides. Become aware of these risks and manage your debt responsibly. This might mean creating a budget, which brings us back to the focal point of this series. So, to summarize the entire series, a good budget will keep your financial health sound and make you financially responsible. If you have liked this video, then do not forget to drop a like. To know more about finance and see more such informative videos, do subscribe to Spring Money. This is Rohit and see you in the next one.